Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. And we started off the day very bullish. Markets actually moving down quite a bit overnight. And then, before the bell rang this morning, we saw a pretty sizable climb most of the night in the futures. To start the day, up quite a bit, up as much as 15, I think, plus points. And then we just, after about the first hour of the day, basically just, uh, continued the bearish move, just fell down. Now, I had a line drawn in yesterday, wasn't real happy with it. Clearly wasn't happy with it today when we got our, after the price action was done, so now I've changed it. I'm going to be using these lines instead on the indices as you see in front of you. Here is the Dow. You can see the move up today, pulling all the way back down. Now looks like it might want to try to go back up and retest these, if not pass through these highs. Going to want to watch this once again, the 9,800 level. If you took a trade above 9,800 or 9,850, actually not a bad trade. It was actually a pretty good trade to take. Did not work out by the end of the day. If you are still in it, I wouldn't be concerned unless we saw a drop below 9,600. How about that? So for those of you that might be in those trades, Dow gets back below 9,600. You might want to reevaluate where you're at with your trade. Not convinced that we won't eventually get back up into this area, but we don't know when. And I'm the type of person that doesn't like to sit around in the hope and pray mode and wait for it to happen. I just like to place my trade and be able to and know exactly when to get in, when to get out. So anyway, back below 9,600, I would be very cautious if you were long this market. Now back up above the 9,800 area might be another opportunity for those of you that didn't go today to the long side to start looking at that. That would start to break this area here. More conservative traders should absolutely wait till we get above 9,900. That is the tougher, more staunch area of overhead resistance at this point. All this is consolidation. So here we are again, consolidation mode. You can see on the daily what we're doing, playing around with this solid blue line down here and starting to move our way sideways. Tried one attempt to the upside. I think another attempt may work out for the bulls, but it's going to have to come in the next couple days in order to get that momentum going to the upside. Continue to watch those levels below 96 and above 98, ultimately 9,900. For the more conservative traders. NASDAQ on a 60-minute, you can also see it retesting this line up here, looking to get back above, once again, 1760, more conservative traders, 1780. Here we are down at the 1700 level, still holding on to it. This whole move right here, I don't know. I can't be sold on it. I mean, what we saw today was a great opportunity for the bulls after tons of bearishness to move this thing upwards. And did they do it? No, they rolled over. I just rolled over. So I'm still not very bullish on this market at this point. They are really going to have to prove it to me in order to get me kind of looking to the long side here on the charts. Here on the daily, you can clearly see the gap up that ended up down for the day. Big black candle here, coming back down and retesting even as low as this. The blue line again. We're continuing to hold that. That is good for the bulls. At least this upper blue line is continuing to hold. That does give you at least a little bit of bullish sentiment to the markets themselves. They're all doing the same thing. At NASDAQ on a weekly, back up at around the 200-week moving average, but it's only Monday or Tuesday. It's only Tuesday, sorry. So I'm not going to look at that quite yet. We'll approach that Thursday and Friday. That does remind me, though, that we are in an abbreviated week, so keep that in mind. We only get 4 days of trading this week. Here it is. Here's the move on the SPX. You can see it. I just drew in this line this afternoon, this lighter blue line. Technically, I should have actually had that in already. But we came up to retest this upper area. Now above 1030, above 1035, still good areas to look for long plays. If you're in and still in, I don't know, nothing to be too concerned about until once again we get back below about 1010. Then you might want to reevaluate again. But as of right now, we're holding up pretty well. I really don't like what I'm seeing here from a bull side, but it is what it is. And looking for breaks still back above 1035, 1030, 1035. Ultimately, more conservative traders really want to wait till it breaks 1050, but if you want to jump in early, it's 1030, 1035-ish, around in that area. See if you can get back up and over 1040, even if you want to still try to front run it a little bit. More cautious traders, definitely 1050 for your entry. Hard to tell exactly which way this is going to go, but this does not look bullish at this point. SPX on a daily, retesting that blue line as all the other ones are, and as long as it holds there, we're fine. It's still quasi-bullish in the short term, but you can see the indecision by the end of the day. Big doji candle here. Up, down, finish flat. So, pretty much saw the bulls and bears shake hands today, call it a draw, and going to try have another run at it tomorrow. Watch carefully if we continue to move back up. Once again, that 1035, one of my areas to watch for a trade along over that area. Back below 1010, still my area to get short on the SPX. Are we building a base? Are we building a rounded bottom? Anybody's guess. But don't once again, let the charts tell you which way to go. Don't let your bias jump in here. SPX on a weekly, it's only Monday. We still are below all of these areas down here, but it being how it's Monday, or golly, sorry guys, it's Tuesday. Seeing how it's Tuesday, we'll approach this again come Thursday afternoon. VIX on a daily also down for the day, so we are getting some confirmation. Markets were up today ever so slightly, and as long as the VIX is down, that is confirming the move. Here we are trapped in between this lower area of support and these upper areas of overhead resistance with the 20 and the 50. If you want to run technicals on the VIX, anybody's call at this point. This thing can break up, down. It really doesn't make a difference to me. I'm just using it as confirmation at this point. You can see us here below heavy overhead resistance with room to move to the downside. If the VIX starts to drop off, that is going to mean more upside to the markets. At least it should. Apple clearly in a consolidation right here. If you want to enter, still looking at 252.50 for an entry there in Apple, but or below 243 for a short. But what we're seeing here is just consolidation. Apple on a daily, also showing the same thing, just moving sideways. Not a lot to trade unless you caught it intraday, and sitting right at or on the 20-week moving average. It's a big line in the sand for Apple, something it's going to want to hold by the end of the week. FAS on a 60-minute sideways chop. You can see the big gap up only to bleed off all day long, coming right back into very good support. These FAS, FAZ are still making for really good intraday trading. $19 down to about $18. You know, it covered more of a move than that, but ultimately you could see a good dollar move in this during the course of a day. I know some of you love playing it, but this is definitely consolidating down in this area and still worth looking at from an intraday standpoint, not so from a swing trader standpoint. Here's 3 days of consolidation. Anybody's guess which way it'll break. Don't jump the gun. FAZ on a 60-minute also showing a big gap down, only to run all the way back up again. So we're getting about a dollar move as well here on the FAZ, depending on which one you like to play. Overall, this is just consolidation. Anything back above 19 gets me bullish. Anything back below about 17-ish or so gets me bearish. From a daily standpoint, you can see us putting in, look at these candles. They are ugly. But as long as it holds the 200-day moving average, I think you're fine. From a bull standpoint, this consolidation, as of right now, is all sideways. We've seen these kinds of consolidations in the past. Sideways consolidations in a move up such as this have to remain neutral to bullish on that kind of a look, and that is how I will be playing it. Back below 17, ultimately a close back below the 200-day moving average could get you a little bit and should get you a little bit more bearish on FAZ. Continue to play these. What? That's right, only from an intraday standpoint. Thank you. If you did swing trade this and caught it above the 1750 area, as we talked about over the previous weeks, you're still in pretty good shape, but you're going to want to be careful if it gets back below 17.7 or 1675 down in that area on your swing trades. That'll do it for today's video. Not much to talk about. Big gap up, only to bleed off all day long. That is not bullish behavior. So make the markets prove it to you. Maybe it tries again tomorrow. If it does, maybe it's able to bust through some of these heavier overhead levels, but make the market prove it to you before you allow that to happen. Okay, subscribers video is next. Got a lot more charts, got a lot more lines drawn in, and I've got some really good things for you guys to be looking at coming into tomorrow and Thursday's trading that we'll be watching as well. All right, talk to you guys tomorrow. Bye.